Hello, today is Sunday, May 31st, the last day of May, heading into June. Heck of a month. We'll take it, no complaints. The purpose of this video is really to give you a non-biased opinion and based on historical fact. So, short term, and again, none of this is a recommendation or advice, so take this as you wish, but this is mainly for my clients, the way I'm investing for my clients, to keep them aware of what's going on. So the S&P 500, which is what I'm showing here, is an index of 500 companies. We are not invested in the S&P 500. It just gives you a macro overarching summary of what is happening. We largely invest in mainly tech stocks, which has been absolutely killing it, which is fantastic. So here's kind of the summary of what we have done the last couple months, and it's a good test. So the last couple months, we got out at 33.80. So we basically saw some indicators that we're kind of seeing right now, to be honest with you, and saying, hey, we're running a little hot here. We're seeing a lot of indicators, the put call ratio low, and some complacency given the environment. So we sold there, did put 50% in cash, which would have done more obviously, but can't time it perfectly. We bought hard at 23.25, and it can. So again, we didn't time it perfect. You don't really need to, and you're never going to. But the 23.25, actually even a little bit below 2300, we added some on March 18th, I believe we added some, and that paid off very, very well for us. I took some gains on the way up and have been trimming on the way up. Wish I wouldn't have trimmed quite as fast as I did. So again, we have not timed this perfectly. Nobody will, but we did very well on the way down. And really my job and what my philosophy is to try to make it a little more smooth sailing. Doesn't mean you're not going to have a 20% dip. I mean, this was a 35% dip approximately, and we have gained most of that back already. So it's a quick move. So here's the summary. We've been talking about this range between 27.28 and 30, basically 28. Okay? This has been a range we've been in for years. And don't be surprised if we break out a little bit. I've been saying this. We might go plus or minus a couple percent, which we are at right now. Don't be surprised if this tests the 31.20-ish area and struggles. It's very common, as you can see, look at the red line, the 200-day moving average, to get some fake outs, meaning you go above, you struggle. You go above, you struggle. You go above, you struggle. I don't think we're going to see any huge dips. Historically, based on historical facts, usually when you break this land, iconic 200-day moving average, you do test it for a little bit. And we have actually tested it, and it's been pretty good. I don't expect this to just be a huge rally into infinity, but long term I do. So short term, I think we are a little overbought based on what I'm seeing, and I'll show you why. So it does not surprise me to see us here. I'm surprised it actually has gone this fast to the upside. Want to be real about that. I mean, I'm not complaining because it has led to some nice gains, but did well on the way down. Not as well as I would have liked on the way up. Just being candid with you, but hang with me. New clients, don't get frustrated. I'm not concerned about making up some of these gains because I think you're going to see another opportunity. I don't expect a 10% dip. I want to be very clear about that. It might be more like 3 to 6. There's so much in cash on the sidelines that people have that I think they're going to say any dip, I don't care what's happening, I'm going to buy it. So good things are happening. It's above the 200-day moving average is fantastic. So we're seeing a lot of good things, and we cannot complain about that and have to be real about it. So why I think you got to be careful, and this is from Helen. She's fantastic. I love watching her Saturday morning chart session, basically saying, and she's very even keeled. I have no idea whether she's bullish or bearish, which is the way it should be, to have an open, honest opinion based on the facts that we see. And we are above the levels of euphoria than we were in February. Imagine that. like February, things were very, very good. And then coronavirus hit and we tanked. So we went from euphoric to panic very quick. Now we're actually even above that. Again, this is Citigroup's panic and euphoria model. So you can see where I'm like, hey, long term, I think this leads to good things because institutions usually do buy at the 200-day moving average, regardless of what things look like. That happens a lot. Okay. So overbought short term does not mean we don't go higher. I think it very well could be because there's so much optimism. Okay. So the next chart is New York Stock Exchange advanced decline. Another Helen chart. I'm like, she just killed it. So I might as well use some of her charts and give her some credit. We are seeing again the advanced decline, which is great. These are good things long term. Advanced decline is above the February level. That's crazy given the fundamental backdrop. Some people are looking at the economy and saying the market is so overbought, this is a bubble. They say it's the same people that say that every time and the market keeps going higher. The market is not the economy. You have to understand that. I'm very well aware of that, but we are overbought short term. So on a little dip, don't be surprised if I buy. We are not seeing anything right now that says immediate sell. I want to be very clear about that. So we're very even keeled here. I wish I had more on right now. However, with the deal with China, with us getting a little more threatening with that whole ordeal with China, you have to be very careful at overbought levels. Some people and some clients are actually positive for the year, and many are. Not even necessarily for the year, but year to date, which is even crazier. Okay, so we have some clients, depending on the risk tolerance, that are doing better than others. So one thing we want to show you is, again, this is not advice or a recommendation. Some of the positions that we actually hold. Most of these we bought on May 18th. Not every client owns these. It's based on risk tolerance. The big one that we have owned since March 17th was the TQQ, which was basically buying. So again, TQQQ, which is the NASDAQ times 3. So we didn't put a ton of risk on there. We started at 50% and slowly have been reducing, which I would have kept more on because that is now up over 100%. So most of these are doing quite well. You can see if I went to May 17th around here, it's been very, very good. And you can see it makes sense. I bought it at 4108, 4107. There it is. So again, not a recommendation. I might not hold any of these throughout the week. So again, not a recommendation, but I do want to make sure I can show you the portfolio again. This is not normal for me to buy things like financials, to buy things like industrials. I was seeing a rotation, took advantage of it. Industrials, financials, where are you? There you are, right here. And so great weeks here, 5 and 7%, basically 6.7%. That's an index, which not an index, but a sector, which I rarely do. So most of these names are individual names, but some are ETFs just to take and try to jump on the trend. Didn't win them all. This one was up, and again, some of these have some issues, and I want to be clear about that. Rarely do I invest this way. It might be 1% of the entire portfolio. So this was actually positive going into the last 2 days and switched negative. So we are a little bit overbought here. I want to be very clear on that. I am very well aware of that. I think good things will happen long term. I really do. This sets up for some great things, and I'm going to show that to you. This week, this is from Ryan. LPL financial guy, he's fantastic, great guy. This week saw 90% of The components in the S&P 500 above their 50-day moving average. Whether you know what any of that means or not, in short, that is a very good indicator. Doesn't mean we are not overbought short term, but it does mean good things for the long term. When this happens, and a lot of institutions do buy the 200-day moving average, we will probably test it a few times, as I stated earlier. But good things in general usually do happen. Now, the whole thing with China does concern me a little bit, but no indicators yet have said sell. So nothing to panic about, but I think it's really important for people to understand, usually when you see green, you initially think it's time to add. Well, we've had a 40% increase off the bottom, okay? So you got to be careful there. Usually when I see that, it doesn't matter what happens in the news, you're probably going to see some chop, sideways to downways movement, downside movement, okay? So just giving you a realistic perspective. So good things happen long term. So long term, bullish. Short term, I think we need some, I hope we see some 3 to 6% downside, because not because I want to add more money, and I do want to add more money, but I think it leads to more sustainable moves, because there's a ton on the sidelines. If more money comes in, it will lead to more upside. And so right now I'm saying this is a little bit extended for me. It's kind of what I did here when I said, hey, I'm not really seeing a ton of reason why we're going up at this point, which happens all the time in the market. But I was seeing some of these indicators. I was seeing this euphoric numbers and just said, hey, it's time to take some gains. Okay. So I hope that helps. Let us know if you have questions. In summary, I think we're going to be range bound for a little bit, but long term, do not be surprised when this goes to all-time highs. Everybody in the news will say it's a bubble. It's a reoccurring theme. It happens all the time. So the market is very efficient, and don't be surprised if the market does better than you expect. We're headed into an election. Everybody has their opinions, which, if the other side wins, the other political side wins the election, they think the world will end. Don't do that. Don't do that. Usually after an election, regardless of who wins, the market does well. So you have got to take your opinions off the table, period. Watch price action, which is what we get hired to do. So short term, wish we had a little more on, but I do think a pullback is definitely needed at some point. It may not happen for the next 3 weeks, though. There's a lot of optimism and a lot of cash. So watching closely, we're not reducing positions. We're not adding positions. That might change if we get a big dip Monday. And that could happen with some retaliation on some of this China news. We're starting to push China a little more on the whole trade deal. So have a great weekend. Get outside. Please call us if you have questions. That's what we're here for. If you're like, I'm a little upset, I'm a little frustrated he's not adding more, please call us so we can chat with you through this, because this is a little unique in how we manage assets for a lot of people. There are a lot of times we have a lot in cash and then pounce on opportunities when they are better suited. Right now, we do not think short term is a great time to add. So let us know if you have questions. Thanks again. Have a good one. Bye.